Well, greetings to all my investment clients. My name is Walter Mazers, your wealth manager, CPA, tax advisor. Just a quick video trade alert. We did place a trade today into SPY, 30%. But before I get into the details of the trade, again, have to read this disclosure statement. This is not intended as investment advice for anyone listening to this video other than my clients. It's not a solicitation to buy or sell any securities. Please seek investment advice from your own current investment advisor. So at your leisure, just read this full disclosure about Trinity Wealth, about myself. If you want more information about Trinity Wealth Solutions and myself, you can go to brokercheckfinra.org. Okay, so that we got this out of the way, let's take a look. Again, this is a special recording for Trade Alert. I placed trades this morning at the open of the stock market. We went into SPY, which is the S&P 500 broad market. So currently our clients have exposure to QQQ, SPY. We're out of gold. We are not in TLT. So pretty much two positions, 60% exposure to the stock market. I'm looking at a 3-month stock market, what it did, and kind of why we got out of the market and why we got back in. Remember, the focal point of what I'm trying to do is protect clients' portfolio. We hit certain targets that were very beneficial to our clients for 1 year, anywhere from 12 to as high as 16%. And the market started to look a little, the trend line was broken right here, started to go down, then it was kind of flatlining, then went back up, and then declined. And right here, you can see this is a definite trend up. Now, there's no guarantees. There's no certainties in the stock market. There's just probabilities. So that's what we're trying to do. So we got into QQQ, which is technology, on 10/24, October 24th. So right here, right here. And then S&P 500 started also trending up, and that gave us momentum, meaning momentum has shifted from a probability of some kind of correction, 5 to 10%. Nobody knew for sure. But hindsight is very easy to say, well, we should have just stayed in the market. But you don't know, this treading water right here, whether the market could have broken the wrong direction. So, again, we missed some upside, but that's okay. We just want to protect clients' portfolios. So, bottom line is, majority of my clients, actually all my clients, have 60% exposure to the stock market, and the rest is sitting 40% in BIL, which is a short-term U.S. Treasury notes, 1 to 3 month notes, paying around 4%. So, again, the other, I think the reason we got back into the market, the probability, it's almost certainty that the central bank, Jerome Powell, I think this week they're going to lower interest rates. The consensus is by a quarter point. If by chance they said, we're going to do 0.5%, then would send the market really skyrocketing. I mean, probably a nice pop to the upside. So, and the other big one is fourth quarter. I think I mentioned this, fourth quarter historically. In the fourth quarter, 80% of the time, markets are up anywhere from 2 to as high as 8%. So those are good probabilities, statistics, that the probability that this quarter may repeat There's many predictions. It could go another 10%. Really, nobody knows for sure. But we just want to capture that upside. So unless something changes, trend line changes, that something dramatic happens, and there's a reversal in the upward momentum, then again, we would most likely get out of the market. But at this point, the momentum has shifted to for the markets to go higher. Again, I underline these. There's no guarantees. There's no certainties. These are just purely probabilities. So if anyone has any additional questions, about today's trade, please give me a call directly on my cell, 586-873-8156. Again, 586-873-8156. So that's all for today. I will be doing our weekly stock market recap, usually Friday or Saturday. So stay tuned. Thank you for watching. Take care. Bye now.